A very good evening and welcome to Markets Today. I'm Reema Tendulkar. With me is Surbhi Upadhyay, and it was a good Friday trade to wrap up a strong week. For the day, we had a rally of nearly 0.5%, the Nifty closing above that 84.50 mark. And even as banks underperformed because of State Bank of India, it was IT as well as pharmaceutical sector to the rescue. So overall, it was a fairly steady session and not a bad one at all.
Absolutely, Reema. As you're saying, perhaps if that disappointment from SBI had not come in and the banks hadn't sold off, we could have had an even better session. But let's not complain. We at least got a 0.5% rally this Friday. Let's start with
2.5% rally this week. So that's
absolutely, absolutely. So going by all the silver linings, let's start with the headlines. Markets come off the day's high but end the week on a positive note. The Nifty closes above the 84.50 mark with a gain of about 0.5%. The Sensex closes in on the 28,000 level. FMCG and IT stocks see good buying, but banks sell off from the day's high.
Higher restructuring takes the sheen off State Bank of India's fourth quarter performance. Gross NPAs come down to 4.25%. Net NPAs improved to 2.1%. The net interest income and the profits beat street expectations, but the stock ends down 2.5% on asset quality concerns.
ITC misses the mark with total income remaining flat versus expectations of 5% growth. Net profit, margins and EBITDA all come below estimates. It's the cigarettes business which has been leading the earnings disappointment.
And modest gains for the mid-caps with the index ending higher by 0.3%. Karnataka Bank, Britannia, Punj Lloyd surge anywhere between 4 to 14% on the back of good earnings. Voltas gains 10% on positive brokerage notes. Murugappa Group stocks like Cholamandalam Investment, Coromandel International end lower on insider trading charges against the group's chairman. All right, those were all the headlines of today, and here's what we've lined up for you on this show. We'll hear out the Finance Minister Arun Jaitley presenting the government's report card after completing 1 year in power. Krishna Kumar Karwa, the MD of MK Global Financial Services, will join in with his take on the markets, and we'll also get you managements of some of the companies that declared their quarterly earnings. All that coming your way in the next half an hour. But Surbhi, first let's turn our attention to the Lal Street.
Absolutely. So let's run viewers through exactly what transpired in trade today. Well, bulls held the upper hand in early trade and actually most of the trading session today, but bears did create some flutter towards the end of the session. The Sensex crossed 28,000 in intraday trade, but then fell below that mark thanks to some profit booking that set in towards the last 1 hour. Ditto for the Nifty. Both those indices did, however, end the day with some healthy gains. We're talking about 0.5% or so. Mid-caps also managed to go home with some solid gains. We had the mid-cap index rise about 0.3%. Anuj Singhal is here with the day's trading highlights. Anuj, bulls managing to prevail towards the end once again.
Well, the bulls had the upper hand through the day, but somehow, it was almost like a strong innings, but somehow in the slog overs, not just finding the right momentum, but even then managing to post a decent total. That's what happened in trade today. The Sensex and Nifty did well. Towards the end, there was a bit of stutter led by State Bank of India, and in fact the Bank Nifty ended in the red, but overall the market were fine. But the Bank Nifty actually fell 400 points from the high point of the day, so if you were trading Bank Nifty on the long side, you would have been punished. On the Nifty, you were fine in today's trade. Let's talk about some of the stocks that led the market higher today. In terms of top gainers, you had HDFC, TCS and Sun Pharma all gaining more than 2% in trade. Apart from that, Larsen & Toubro, Reliance, ONGC, these were some other prominent winners in today's trade. ONGC up about 1.5%. On the losing side, State Bank of India, at one point it was the top gainer, ended as top loser, down about 3%. Ultratech Cement as well, down 3%, and Idea as well was down 3%, mostly profit booking in some of these names. Apart from that, Hindalco, Vedanta and Grasim, these were the three other big losers in trade today, down about 1%. Not too much of mid-cap activity today, but one thing that stood out was that mid-cap earnings are looking good, at least some of them, and you're seeing stock reaction as well. Punj Lloyd was up 13%, Voltas was up 10%, easily your stock of the day, and Karnataka Bank was up about 4%. So for now, bulls remain in control, but next week is expiry week and things could get volatile again.
Yes, indeed. Anuj, thanks so much for running us through that. Now let's straight go across to our first market voice for the day. Krishna Kumar Karwa, the MD of MK Global Financial Services, says market valuations are running ahead of economic growth and that it's best to adopt a bottom-up investment approach.
Sometimes what happens is the expectations have been ahead of the curve, and valuations of the markets accordingly are ahead of what the ground level or the basic fundamentals hours. Markets have discounted the expected uptick in advance, and we believe that the turnaround in the economy per se would take longer than expected. Maybe it could be at least 4 to 6 quarters ahead of the curve. I think mid-cap investing is all about bottoms-up investing, and that's where it stands. There are quite a few cement companies in the mid-market sector where if you believe that on a 2-3 year horizon, if you are positive on the whole domestic economy and the infrastructure space, then quite a few of them offer reasonable valuations and decent operating cash flow from a 2-year perspective. Some of the PSU banks, they came out with numbers which were much better than expected, and we have also seen the stock prices of some of the PSU banks performing accordingly. Many of the PSU banks, the valuations of many of them now are like mid-cap valuations. So probably from a longer term perspective, the whole PSU banks look like a decent long-term investing opportunity.
Okay, that's a view on the market. Now let's come to the major earning of the day, and we are talking about India's largest bank, SBI, and a very interesting detailing of those numbers, and it was quite apparent in the way the stock reacted as well. So if you look at the numbers optically, everything seemed to be going right. On the profitability front, State Bank came out with a beat. On the net interest income, once again there was a beat, and optically that gross NPA number and the net NPA number looked extremely healthy. Gross NPAs falling to just about 4% and net NPAs coming down to about 2.1%. Improvement sequentially. This happening on the back of the fact that the bank has sold off a lot of bad loans to asset reconstruction companies. However, the devil was in the detail, and once that restructuring picture became apparent, the bank has restructured assets close to 12,000 crore rupees this time around, and once that number came out, there was a sharp reaction on the way down, and SBI, as we can see thereafter, spiking up almost 4 to 5% intraday, finally ended with a cut of about 2.5%. Let's hear out what the management had to say today.
When we talk about consolidation, I mean literally cleaning up of the balance sheets, ensuring that we do a lot of recoveries, and those are seen in the numbers, amount of recoveries we have been able to do. Pursuing new opportunities in order to ensure that this recovery is of a lasting nature, and also ensuring that we change products and processes so as to make it more risk mitigated and make it robust so as to be ready for the economy as it turns.
All right, the SBI stock, which rallied as soon as the numbers came out, but if you see the intraday chart, there was a sharp sell-off in late trade. Ekta Batra has been poring over these numbers, joins in with her analysis. Ekta, very volatile moves for the stock, and we've been highlighting how the devil is in the detail. Walk us through your analysis of Q4 earnings for SBI.
Yes, absolutely. It is definitely the internals which disappointed the street. So optically, the numbers did look good, and there was no taking away from the fact that the NII growth was 14%. It was a double-digit growth all the way after Q1 of FY15, and we saw the profit growth of around 23-odd%. Even the provisions grew around 12-odd% on a year-on-year basis. This compares to an average of anywhere between 30% in the past 3 quarters. So those parameters, you have to give it to the bank in terms of maintaining them. In fact, even the gross NPA came down on a sequential basis, and the gross NPL figure came in at around 4.25%. What really spooked the street is how exactly the restructuring loan came about in this quarter. For example, they did fresh restructuring of around 11,885 crores or thereabout, and this is versus around 2,580 crores that they did in the previous quarter, and versus estimates of around 5,500 to maximum 6,000 crores in the quarter. The management did mention that there were very small loans that they in fact restructured this quarter, and that resulted in this figure coming through. And in fact, the pipeline up to 30th of June stands at over 2,000 crores in terms of restructuring. In terms of fresh slippages, in fact, that came down to around 4,700 crores versus 7,000 crores Q-on-Q. So that was a big positive which came in for SBI. And however, it was the sale of loans to asset reconstruction companies which was over 4,000 crores, and they had recoveries of over 4,000 crores in this quarter as well. So that really helped in in terms of the gross NPLs coming lower on a sequential basis. So maybe that was something which the street didn't like or wasn't too happy with. But primarily, all of the analysts that I spoke to were more concerned about the restructured figure of over 11,000 crores as opposed to the sale of loans to asset reconstruction companies this quarter.
Okay, all right, Ekta, thanks so much for running us through the details. Really a very volatile set of numbers and a equally volatile reaction on the stock today. Well, let's talk about more earnings. FMCG major ITC also reported their quarterly numbers today, and we have Pragya Bhardwaj now joining in to take us through the fine print. Pragya, seems like a big miss on the top line to begin with.
Well, you talk about the top line, the bottom line. It's a miss on all parameters this quarter from ITC. It's a very, very disappointing performance. In fact, none of the analysts on the street were expecting a performance at that low. If you talk about the total income, it's a growth of only about 0.6%, substantially below the street expectations. The company's reported only a 1.2% uptick in the absolute EBITDA. Operating margins, they're managing to hold on to that 34.9% mark, which is a growth of about 20 basis points, and a PAT growth of about 3.7%, looking extremely dismal. I'll not talk about the internals of the numbers. Otherwise, straight on move to the segments of the company. Cigarette, which is the mainstay business of the company, there they have reported just about a 3.2% revenue growth. Remember, they have taken roughly about an 18% growth in the month of January in the anticipation of an excise duty hike, and that seems to have played pretty much havoc with the company's overall volumes. This would be the 8th consecutive quarter that ITC has now reported a decline in its cigarette volumes, and the 2nd consecutive quarter, which the back of the envelope calculation suggests that it would be the 2nd consecutive quarter of a double-digit decline as far as the cigarette volumes are concerned. So there should be some concerns that the analysts flag off. And remember, this will not be the end of it because of the fact that there was some inventory stocking which the dealers did. So the entire impact of the price hike which the company's taken, another 15% post the budget which happened between Q3 and Q4. The full impact of this will come in Q1, which is when we'll see the real tragedy as far as the cigarette business of the company is concerned. Quickly on the other businesses of the company, FMCG others business, it's 11% growth, marginally below the street expectations in terms of revenues. Hotels continues to remain sluggish. Agri-business surprisingly has reported a degrowth versus our expectation of a growth. This time it's a decline of about 29% there. Paperboards also remains challenging. So it's not just cigarettes, whether you talk about hotels, agri or paperboards, this quarter seems to have done, it's a poor earnings report card as far as ITC is concerned across the board for a lot of its segments. Not a very enthusing performance. Stock should definitely see some damage, as far as Monday's trade is concerned. It's already trading below its 200 DMA.
All right, Pragya, definitely not a very inspiring quarter by ITC. But let's talk about one earning that seems to be at least a happy one given the stock impact. So, Pragya, if you could also run us through what happened to Punj Lloyd. In fact, we should probably pull up the line graph for Punj Lloyd. As soon as those numbers came out, we had a very sharp reaction coming in. And Punj, in fact, managed to end up almost 14% higher on very, very heavy volume. So, Pragya, just a quick broad brush understanding of what's gone right for Punj.
Well, as far as Punj Lloyd was concerned, it was a good quarter. It's a fair bit of a decline which the company has reported as far as its top line is concerned, but not too much to read into it given the fact that from the time of Q4 of FY14, the company has been reporting almost a 26 to 50% decline in the top line, which is largely on account of the weakness that we've seen in the overall order intake and a weak order book of the company. But, the mainstay why the stock went up close to about 14 to 15%, that reaction was warranted because it's the 2nd consecutive quarter that they've reported a positive EBITDA, something that the management has been alluding to. So at least operationally things are starting to stabilize for the company. It's a big margin expansion, also 17.4%, something that they haven't seen for many quarters. Of course, the decline in the sales that the company is seeing is giving them a huge operating leverage. All the line items as far as the expenses were concerned, whether you talk about cost of raw materials, etc., has come down significantly. But they have ended the year with a slight bit of a negative, EBITDA, and it's a bottom line loss. So we'll have to see if performance stabilizes. The other positive trend in the results, monetization of non-core assets. There's the big other income that came on account of that. So there is some movement that's starting to happen on those accounts, and of course, some stabilization of EBITDA. The company is now focusing on solar, defense, those kind of businesses. So things looking a lot better in terms of future visibility as far as Punj Lloyd is concerned. Stable performance this time.
Okay, a qualitative and a quantitative wrap of Punj Lloyd as well. Thanks, Pragya, for taking us through that. Moving away then from the earnings corner, while the coal ministry may have emerged as one of the top performing ministries in the past year, the government is now set to make a slew of announcements on auctions in the next few days. Anshu Sharma joins in with all the details. Anshu.
That's right. After a good year of performance by the coal ministry, now the government is likely to shift focus on the unregulated sector with auctions. A slew of announcements are expected in coming days with regards to auction, and it will not be just limited to coal mines auction but also coal linkages. As we understand that 23 coal blocks are already identified, of which 11 will be meant for the unregulated sector, which comprises of cement, aluminium, steel and iron industries. On the coal linkage side, the government, the interministerial committee has already identified two methods for auctioning coal linkage for the unregulated sector, which are bucket filling method and ascending market clearing method. The bucket filling method will be based on auctioning of certain amount of linkage where companies will have to bid, and it may or may not meet the requirement of linkage for all the companies, as we have seen in the gas auction. In the ascending market clearing method, it is similar to telecom auction method, which is to basically equate supply and demand with increase in coal prices. We also understand that the government is looking at giving coal linkage for auction to the states, and states will conduct a auction where the companies will have to bid a lower tariff to successfully acquire coal linkage. But these are still being deliberated by the interministerial committee, but we expect some announcements on the rules and final guidelines on coal linkage auction very soon. Back to you.
Okay, thanks Anshu so much for that. So lots in the pipeline as far as the coal ministry goes. Time for a break now, but coming up on the other side, we will tell you about all the other stocks that were in the news and also the events to watch out for next week.